Type 9.
What's cracking, my friends and my fellow traders? How are you guys doing today? Welcome into the live stream, the Everyday Growth Advisors live stream, where we break down the market for you. And if you're here for the first time, please make sure that you click like and subscribe. We are gonna break down Walmart, SPY, Dow Jones, NASDAQ. I'm sure you guys have a bunch of questions. I already see some in the chat. Thank you for coming through to the live stream. I appreciate you being here, taking out your time out of your busy schedule, losing your sleep, pulling your hair, jumping on the couch. But I do hope that you have a cup of coffee and a bagel ready for the destruction, demolition that we are about to unleash. Now, I know that many of you are rather confused on what is going on with these market that is going on. But I'm going to attempt to break it down for you. I'm going to attempt. Now, I don't know what's going on, but I'm going to attempt to break it down based on what I see and what I can say for you. Okay, so without further ado, let's get this jiggy started stream. All right, let's have a look here. So let's go through our regular programming here. Rest in peace to all the people who lost their lives with the Beirut blast. That was insane. Never seen a blast like that in my life before. I feel like, this is some really, really messed up stuff. Really hope that, the people that perished in this very crazy event, get some peace in their after passage of life. Yeah, that's all I can say, man. Honestly, it's very sad to see things like that happen. I'm not sure why it happened or how it happened, but I just hope, the best for the people and their families during this tough time. And also, well, then we have U.S. futures climbing with European stocks and gold. Gold, once again, as I've been mentioning for a long time, it's going to outperform all equities and asset classes this year, in my opinion. I've been saying it for months and months and months. And personally, I have physical gold, so I'm not really investing in any ETFs or anything like that. I prefer to hold my gold in physical form. So if you are not invested in gold, this is absolutely not the time to get in. So any questions relating to gold in the live stream, if you should get in, please don't ask me those questions, because if you have to ask me if it is too late to get in, it probably is too late to get in. And that goes for every single thing. Okay. Okay, let's see. Malaysian glove maker Harps weighs 500 million IPO. This is going to be a short-lived IPO. Sydney regulations. Okay, Scotland locks down oil hub. Okay, world's hottest stock is a money-losing tech giant, scoring 880%. Who the heck is that? C Limited. Oh, I feel like we were trying to play this a couple of weeks ago on Option Swing. I think it was Kevin Fomo who called this one out. Interesting. I haven't even looked at it since then. Gold barrels past $2,000 with stage set for further rally. At this point, gold is going parabolic. And okay, let's see. All right, Bloomberg. Look at first claim to any successful Arcturus vaccine. Of course, Singapore will get first claim. You know why? Because they have a shit ton of money. That's why. Which is actually really terrible in my opinion. It shouldn't be that way. Okay, Amazon makes sweeping changes for first prime day of pandemic. Okay. Disney gains after surprise profit. Streaming plans for Mulan. All right, Bloomberg. I would say, what would you call this? This is bullish news, right? Bullish news. Bullish. Tencent in talks to create 10 billion streaming giant. Bullish. Gold rallying. Bullish. Stock market rallying. Bullish. All around bullish from Bloomberg. All right, you know what they say. If it's bullish, what do we do? What do we do, stream? What do we do? Let's look at Wall Street Journal here, see what's going on. Yeah, U.S. stock futures edge higher, gold rallies. Good news. With biotech tech stocks, investors love the thrill of the chase. Good news. Commerzbank takes a hit on Wirecard loan. Not that good news. Okay, Argentina debt deal illustrates coronavirus blow to emerging markets. This is actually a very interesting thing. I was actually looking at the bond markets in emerging markets, and the yields are ridiculous. You can get literally 30 to 40% holding some emerging market bonds, which are actually damn bloody crazy. So, I'm talking about the annual yield. I'm not talking about a monthly yield or something like that. I'm talking about an annual yield. So broken down into a year, you're looking at a little over, say, 30% divided by 12. 24 divided by 12 is going to be 2%. You're looking at like a monthly 2 point some percent gain on your investment, which I know it doesn't sound a lot, but for a yearly performance, that is a substantial amount. If your portfolio can grow at 30% per year, you're doing a good job, just for your information. Okay. Not many people beat the S&P 500, and the S&P 500 has a annualized return of about 10 to 12%. Actually, it more so ranges between 8 to 10% after you take into account for inflation, and then of course the Cape-Shiller index. Okay, so all right. CNE settles lawsuit, blah, blah, blah. Okay, news is looking kind of bullish, guys. News is looking bullish. U.S. seeks as much as 1.8 billion from Purdue Pharma. Okay, it's just repeating the same news here. And then the whole Microsoft TikTok thingy is still going on, which I'm not paying attention to because it honestly doesn't make sense for me to even pay attention to it. Okay, let me read some of these things in the chat. Welcome, welcome, welcome. Good morning, good morning, good morning. Whoa, Byron, that's a lot of questions, bro. Okay, I got you though. Give me a second here. Once I'm done with the regular streaming, I will get to all your questions. Whoa, okay, okay. I'm gonna continue to ask about gold. Go ahead, man. Go ahead. I'm just kidding, man. We hedge, absolutely hedge. But with what? Good question, Sri. I'm about to go through that, and I may also, give some recommendations on some contracts to take as well. Let me actually fire up my app real quick to have a look at what are the suspects, and we'll get to it in a second here. Okay. Well, pre-market movers here, we have mostly... first of all, we have numbers with the trade balance, GDP, affecting numbers. Imports are, once again, higher than exports, so we are negative net exports here, which is not specifically good for this specific situation that we're in. When US dollar gets cheaper, you want your exports to be, a little more balanced than what it is right now. So in terms of gold and how it's doing against the dollar, one of the main reasons, and I see possible sell-off in gold starting here. We'll see how that turns out towards the end of the day here. Also, we have ADP, non-farm roll employment change, which is... Wait, what? How is this so low? Huh. What? Did somebody miss a zero or what's going on here? That's really... Oh, okay, I see. It's minus from the previous batch. Okay, well then, I mean, I guess it's not that... Okay, it is bad, but not that bad. Okay, expect a muted effect on this though. Make sure that you realize it's not gonna... It might not possibly affect the market right now, but you know how greedy market makers can be. Now you also have oil news coming out at 9:30, and then you have services PMI. Lots of loaded news today. Stocks that reported earnings, CVS beating EPS and revenues. Regeneron Pharma, same thing. Let's see. And then we have a couple of good companies reporting earnings today. Berkshire, we have Baidu, we have... Oh, Moderna also reported earnings better than usual. Oh wow, that's a big revenue beat. That was a big revenue beat. Let's see how it performs during the day though. Definitely watch out for Moderna. It's one of those that can take off for no apparent reason. And then I think Disney also posted earnings. Apart from this, we don't really have that many that are of notable numbers here. Western Digital might be one to watch. I like that stock. I think it has a good portfolio. And all right, cool. Yeah, I don't see anything else. Oh, and Dish, right? Dish is another one. Definitely watch that one. Cool. All right, moving on here. Let's have a look at these pre-market movers. Anything here? Nothing much here. Let's look on the S&P 500. CCL up 4%. Travel stocks are also one to watch. I think airlines, Boeing, I've been calling out Boeing for a while now, that I have a long-term solidified position in Boeing that I have been adding for a long time. I've been kind of like buying it on the dips and kind of accumulating a position here to play to this upside here, which has been, this stock has been battered out. I bought some $300 calls for next year June, which are up about 40%. Those are doing pretty nice. I have some 210 calls that I bought for January and for November. So I have about 7% of my portfolio in Boeing right now. And I'm not saying that you should. All I'm saying is that, it's just something that I am building. It's a position I'm building. I've been building it for a while, okay? And why am I building that position? Well, I'm going to come to that in a second, okay? Okay, Intel, Microsoft, ExxonMobil, another stock that I really like that is part of energy, which I highly recommend also getting, in the near future. I think ExxonMobil is a solid company, pays very good dividends, and it's a stable company to own long term. Okay, that's this. On this side, we have Square up 10% after blockbuster earnings on the success of Cash App. Now, everyday growth advisor students who have taken the beginners course with me, and we've been talking about. We actually broke down Square in one of our fundamental analysis classes. Okay, and if you were part of that batch, you would know that I was really emphasizing on how Square's success is super dependent on Cash App. And you can see the Cash App user spike has really caused the stock to pop here. Now, in terms of intrinsic valuation, after this earnings, we'll have to recalculate what the stock is worth. But when we did calculate the stock, it was $125 intrinsic value. 125 was the intrinsic value of the stock at that time. Now, after earnings, we'll have to see what we should plug and play to change in this equation. Okay. Other stocks that are moving here, bunch of them in fact. Gold and silver as well. Oh, New Relic, damn, down 19%. What happened there? Oof. Jeez, gotta see. Beyond Meat also down. I'm guessing these are all earnings related. You have to see how they perform. Wayfair down 4%. And I'm saying, I think that airline stocks are one to look at right now as well. But don't just look at all the airline stocks. We did an analysis for airline stocks a while back. Let me see if I can find it. I don't know if I will be able to find it. No, probably not. I'll try to find that document sometime. But the gist of it was that we did a breakdown of airline stocks, and we found that Southwest Airlines, LUV, is one of the best to invest in. And then I think second was Delta. One of the bottom of the pile in terms of financials were AAL, and I believe it was Alaskan Airlines. So these should be the two you should watch for good fundamentals companies that you can buy and hold for a while. If you're looking at getting airline stocks, those are the ones that I recommend based on their fundamentals, of course. All right, cool. That's that. Look at the pre-market movers on the heat map here on Finviz. You can see that majority of the market's up except for tech. Okay, and I'm going to continue to profess the idea that industrials are one of the things to watch here. Industrials, okay. Industrials, energy. You want to watch these. I've been talking about these for a while. And consumer cyclicals, okay, consumer staples, those are the ones. Consumer defensive also, right? Household companies, these aren't going away anywhere, okay? These are not going away anywhere. Industrials are suffering a short-term downside, but remember that once we come out of this, we're going to start seeing a pop in all of these. Now, this is going to play very nicely into what I'm about to talk about next, which is the fact that all the indices are in a very specific trend right now. Okay, so going into our SPY technical breakdown, well, I should call it the SPYDEF. The SPYDIN? No, the SPYDIN. Yes, the SPY Nasdaq, the SPY Dow Jones and Nasdaq analysis. The SPYDIN. 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 This is the breakdown. Okay. Now, I was talking to my mentees about this earlier today in the morning. Just so you guys know, we have an intermediate course running right now, and so I have a lot of fun with them because we discuss some interesting things on the mentorship course. And one of the things that I was discussing with them is the thing that I've been repeating over and over and over and over again, like a tape recorder, like a broken tape recorder, and highlighting how SPY, NASDAQ, and the Dow Jones are out of sync here. Okay, how the S&P 500, the NASDAQ, how NASDAQ has rallied to all-time highs, right? And that's because tech has been leading a rally. We have SPY, which is almost catching up here, filling up this gap, right? To all-time high. It wants to break all the way to all-time high, but will we see it happen all at once? Probably not, right? as I told you guys, like the path to there is definitely going to happen, but how is it going to happen? Is it going to go like this and then like this and then like this and then like this and then like this, like this, or what's going to happen, right? It can take many different paths, but you can see that this channel that I've drawn is still holding steady. So chances are that we're going to, make a couple of these and then boom, try to break up against this channel over here, okay? But out of the pack, you can see which one has the most room to run. Now, when you have something like this where all three are out of sync, and you can see I drew a channel here as well, which the Dow has been very nicely kind of respecting, the Dow Jones has the most move to make, right? Granted, it could do this, right? But at some point, what's going to happen is it's going to do this and then try to break up to all-time high. Now, what's going to happen is the momentum from the NASDAQ and SPY pushing these up is going to cause the Dow Jones to push up. Or if we get any news that signals further stimulus, further monetary policy that's loosening and help to industrials, energy, or utilities, or consumer cyclical businesses, then we're going to see the Dow Jones rush up very quickly to race up back in sync with the NASDAQ and with the SPY. So this presents a unique opportunity for you to invest in battered down stocks that are within industrials, energy, and consumer cyclicals. Because why would you want to put your money into something that's overbought when there's some other stuff that you can buy that's off not full valuation yet? Okay, so these are the things that you should be thinking about right now. Rotate out of technology, rotate out of things that are overbought, and rotate into things that are less bought, which are energy, industrials, and consumer cyclicals. And if you want to know what kind of stocks to look at, then you should be looking at everything in this yellow box right here. Okay, so choose the top two of every single one and then go with that. Now, many people also have been asking me when is the right time to get into financials. Now, this is a good question, but let me put it this way. Financials, I think, are still going to suffer in the short term. Okay, in the short term, financials are going to suffer. Why? Because from a fundamental standpoint, the market will not reward finance related stocks because of the fact that interest rates are so low. And if the Fed remains with low interest rates for the foreseeable future, that doesn't give financial firms and any margin of profit. Okay, when you are a financial services company, or you're a bank, or you're a company offering credit, right? You can't charge people more if your interest rates are low, because the price that you charge people to borrow money is pegged, or it's somehow implicated or controlled by the interest rates that the Federal Reserve sets. Okay, which is like a mechanism to put things in play, right, for consumers. Okay, and also if the risk-free rate is at a certain point, then consumers are not going to look at it favorably if you suddenly increase your rates, right? They say, what the hell, this guy's not passing the savings down to me. So they're self-incentivized to make sure that the system works that way. All right. It's funny how today our energy is up. I wonder how NEE is doing. I've been looking at this one for a while. Oof, yeah, this one. There you go. This was the one to buy, man. Breaking out here. Looks like a good play as well. Personally, I like this stock a lot. This might be a move. Watch for it to break out here and try and hit some new all-time highs here. So watch NEE today as well. Energy, as I was saying, these are primarily the companies that you really want to watch right now. Energy companies are, especially like, look at XOM right here. You could easily play this to the upside with very minimal downside. Set a tight stop loss over here and play the upside with a big risk to reward ratio here. So there are certain stocks here that you can look at and you just be like, okay, now this makes sense. Welcome into the stream, guys. I hope you guys are having a good day. Make sure that you guys smash the like button. That's all I'll ask for when you're here. If you can just hit the like button, that would be really appreciated. I would super appreciate you very much. Also, if you were interested to donate or support the stream, there is super stickers and super chat that you can use. I will be coming out with a lot more features for this stream in the future, so definitely stay tuned for more info. Also, I don't know if you guys know, I made an announcement last week. Now every Tuesdays and Thursdays, we'll be holding webinars. It's a mini webinar series. If you haven't checked it out yet, you should go on my channel and check it out. On Tuesday, we did a short webinar, which is kind of like to showcase my teaching style and how I actually do things in the mentorship course. If you were interested to see what my teaching style is like, go and click on this video and watch the EGA growth webinar. The first webinar that we did was on market fundamentals and candlestick mechanics, and tomorrow we'll be covering some charting. Okay, so I'm going to dive into technical analysis and show you guys a little bit more about my indicators, how I set them up, maybe even show you guys how to create a watch list, stuff like that. So I might discuss those ideas tomorrow. It's going to be a free and easy kind of a stream where I use 30 minutes to get the most out of it and teach you some basic concepts. I hope you like it. Okay, and if you think those are helpful, please give me some feedback. I would really like to hear from you. Okay. So I did speak enough about all of the pre-market stuff right now. So just to recap what I'm saying over here, watch for the Dow Jones to rush up here all the way to catch up with the NASDAQ and SPY. And then at the same time here, I think it's a good time to buy some hedges on SPY and on NASDAQ. However, I think that you should wait for SPY to do one of those irrational candles to go all the way up there. So the actual right spot to buy a hedge on SPY would be to wait, till we get one of those really big irrational candles, something like this. Something like this, right? Maybe like this, right? A big irrational candle like that, which confirms that greed is in play here. Because with these small candles, we can confirm that the market's chugging along, but we haven't reached a confirmation that greed is in play, and that's why I don't see this moment as a very strong indicator for us to buy hedges. Now, I do like the idea of buying a small hedge, like a small position, 1% of your portfolio or 2% of your portfolio, just as a insurance bet against your long positions. Okay. Now, you have two choices to do and ways to do this. One way is you hedge against SPY, which has had a pretty big run up, right? And then the second way is you hedge against tech, which has had a pretty significant run up as well. Personally, you're going to have to look at which hedge is going to be cheaper or has a better risk to reward ratio. So I'm going to actually pull up QQQ here on my phone and check how are the options looking for those. Typically, we want to buy hedges for about a month out so that we can capture the most time value. So we're looking at about September 4th options for QQQ puts, and I don't intend to hold this for 1 month, so don't get me wrong there. What I'm saying is you buy the option so that there is time value in that option. And even though it's an expensive put, what you want to do is buy it slightly out the money so that it becomes a bit more affordable. And then you can actually capitalize on the downside move. Now, you can also alternatively take a more cheaper or a nearer expiry, but I wouldn't go nearer than 2 weeks out. So the earliest that you should be taking any hedges are pretty much August 14th, August 21st. That August 14th is really cutting it close, okay? But you would get decent time value there. And then you want to take this in case QQQ fails to break out here. You could play this to the downside, and a 250 or a 255 put would play out really nicely here. If you were to take this, so a 255 put, let's have a look here. On August 21st, if you were to buy a 255 put, the price per put right now is about 169. Of course, this is going to change. Also, there is a substantial amount of open interest for this put. There is 57,000 almost open interest with the implied volatility of about 30%, which is A-OK. So this is a decent trade to take here. Let me write it down so that you guys can have a good idea on what I'm looking at here. QQQ puts, right? You can also employ a spread. You can also do a spread if you like, and then play this to the upside once we bottom out here. So what you could actually do is sell calls above, and then you could do that as well. Do a kind of a bearish call spread. That's what you could do. There are a couple of ways you can play this, but let me go with the vanilla option here. QQQ puts for 255. Okay, that seems about right. For 821, it's currently trading at $1.69 roughly after hours. Of course, this is going to change when the market opens. I think it's going to be even cheaper, so you might get a discount on this. We have this at IV 30%, which is really nicely priced. So I would recommend getting maybe one or two of these and just holding them for a while. Now this is just in case something happens here. Of course we can keep running here, but this is a insurance put, so expect to lose all this money. You're expecting to lose 100% of this money. Okay, 100%. Okay, and then if somehow it hits, you get a payout from your insurance. Okay, that's one of the options that you can go for. Now, if you want to go for a multi-option here, what you could be doing is you can sell a in the money put here, or sorry, you can actually you can sell an in the money call also. It kind of just depends on how you want to do it, but there are a couple of strategies that you can go for. Now, the other thing you can look at also that I failed to mention is UVXY, but I have a feeling, this is another one that you can look at. Okay. UVXY, this would be another a great idea to go with if you're planning to play a hedge, right? Look at how sold off it is over here. Buying calls on this would be extremely cheap right now, so you should get in before everybody else gets in. The idea is to get in before everyone else. So August 21st, once again, and you're looking at perhaps if we get a decent spike up here, a $25 call should pay pretty nicely. Actually, let's look at this once again. $26 call, 26. It's going to be a tad bit more expensive, but this is going to give you better risk to reward ratio here because this is a leverage ETF. It has a little leverage in it, so it moves at a factor more than its counterpart. Okay, more than WIX. Okay, so a $26 call might be decent as well. Looking at how $26 has been a common space here where VIX has been trying to do run up towards, and if it ends up running all the way to $28, you would be really making a really nice delta push up there. So looking at this at a $26 call, you're looking at a UVXY calls. Remember, none of these things that I'm telling you are financial advice. This is just what I see as things that might be plausible in terms of trades that you may consider. Remember, this is all educational. This is a educational stream, so remember not to take these trades unless you are willing to lose the money that you are putting into this. Okay, so UVXY calls at $26 strikes, and for August 21st, once again. Okay, these are going at about $1.98 as of right now. I think it's going to open up even cheaper, so expect this to come down to about the price of what we were looking at QQQ puts to be, and I think that this would be a decent play to play this upside bounce if something were to go wrong. Once again, insurance puts, these are strictly insurance. Expect to lose all your money there. Okay, expect to lose all your money. Okay, great. Welcome into the stream, guys. I hope you guys are having a good day. I hope that you can just take a second here to just click like. That is the only thing that I ask for you. And if you haven't subscribed yet, go ahead and subscribe to this channel. We do this every Monday, Wednesday, Friday. Actually, we do this every Monday to Friday. It's just that Tuesday and Thursdays are a educational webinar, and this stream is fully devoted to being a educational stream for the stock market. Okay, where we come here, where you can come here and learn things rather than have things thrown to you. Okay, so I hope that you just take a couple of seconds here, smash the like button, because I want to really get to 90 likes today if we can. Let's see if we can do it. Can we get to 90 likes today, guys? Please. I hope that we can. Okay. Also, let me know if, in the chat, in the comments, let me know if all the stuff that I've shared with you guys today is helpful. Okay. I would really like to hear from you. So let me know. All right, cool. Now we have about 30 minutes left. I want to spend about 15 minutes talking about Walmart here, the fundamental analysis for Walmart. We've been talking about it throughout the week here. Remember, today is Fundamental Wednesday. We pick a ticker every week, and so today, this week, we chose Walmart collectively as a group. And now Walmart's a great choice because remember that it makes up a good portion of the Dow Jones and SPY. which are two indexes that have room to run up. Okay. Now the bull case for Walmart is pretty solid. I've been looking over the company for a while now, and it looks pretty damn solid. Okay, but there are a couple of things that can affect the bottom line, and I'm gonna go through them right now. Okay, so let me kind of give you my summary and see, you know, what sticks and what is you know, better for you guys. All right. Alrighty, cool. I just missed the hedging. Which ones did you mention again? Geez. Can somebody tell Jeff what were the hedges that I just mentioned? Because I don't remember them neither. It was UVXY $26 calls for August 21st and QQQ 255, I think 255. Yeah, 255 puts for 821. Those are the ones we were looking at for hedges. Cheap hedges that you can take that may pay out. Those are like insurance hedges, okay? Expect to lose 100% of them. Expect to lose 100% of them. I'm going to write them here. QQQ puts 821, 255, strike, and UVXY, $26 calls, 821, $26 calls. There you go. I wrote it in the comments for you. Come on, guys. I'm sure we can get to 90 likes here. Please, 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 if you can just click on the like button, that would really, really help me out. It's gonna, you know, recommend this video to other people, and I really hope that, you know, we can share this knowledge of wealth with other people, because YouTube doesn't recommend the stream to other people if you don't click on the like button. And so I really hope that you can just take 1 second out of your time to click the like button. That would really, really mean the world to me. It would mean the world to me, guys. Okay, thanks. All right, let's get on Walmart here. So we've been looking at Walmart for this entire week, forming kind of an ascending triangle here, waiting to break out. And I feel like it's going to continue squeezing into this triangle here. I don't know for how long it can squeeze, but I have a feeling, I just have this weird feeling that it's either going to break out here or it's going to continue squeezing and going, you know, like this, and then like this, and then like this, and then like this, and then eventually break out. There is a very high chance that, you know, and stocks do this very often sometimes, where they squeeze and squeeze and squeeze, and then, you know, kind of break out of this ascending triangle here. But from a technical standpoint, we're seeing a good upward bullish trend. Volume is starting, you know, we need a little bit more volume here to get into Walmart as a solidified trade. A break above 133, sorry, a break above 134, even with good volume, would be a really nice upward momentum play. Okay, sending Walmart to all-time highs and upward momentum here. Okay, so this is what we're looking at here. A break above 135. That would be a really nice play for Walmart. 134, 135. I would say 135 is more safer if you want to be conservative. And I think that you would avoid market maker pressure here, because, you know, market maker might consider kind of if you go at 134, what might happen is market maker might just kind of open your order and then kind of dump. So I say 135 or 135.50 even, you know, to really solidify the uptrend. It's okay to lose a little bit on this side if there is so much more upside. Okay, and also I don't recommend playing Walmart as a short-term play. Okay, after my analysis, I can tell you that this is a solid company to own shares in. Own shares in. Okay, so let me get into this a little bit. So where do I start with Walmart? Now, I was reading and combing through the 10Q for you guys, and honestly, I didn't find a whole bunch of things that are super important. In terms of legal matters, they don't have much going on different than what they have been having going on different. Okay, so legal matters wise, Walmart is doing the same. Now, what I did find important from this entire 10Q was to actually solidify the idea that Walmart is kind of really, you know, containing its cash flows, protecting its assets, and also reducing its capex expense. What is capex? It's capital expenditures. Okay, things that are related to property, plant, equipment. My goodness, my tongue is just rolling today. Sorry, guys. So what I was seeing over here was, let me try to get to it real quick. Here we go. Okay, so Walmart and Sam's Club, you have net sales. Here we go. So net sales are up about 8% year over year, which is actually pretty decent for a company of its size. Okay. Now look at this over here. Allocation of capital, CapEx. This is important. Now, not many people know, CapEx for a company like Walmart is usually big, right? They almost spend $1 billion in CapEx. Well, look at what the company has done since COVID, right? COVID hit, and now they've reduced CapEx down, by a pretty sizable measure. Okay, so this is good, prudent measure by management to really make sure that they try to save as much as they can. And Walmart's, a company that is very big on making sure that their business is lean. Okay, so this is something that you have to take into account. Total assets liabilities wise, we're going to be talking about this in a while and why this is not an issue. Many people see this as a negative for Walmart having a very big liability, but I will tell you why it's not a problem. Okay, and I'll get to this in a second. So then we have free cash flows here, and look at free cash flows and how much it's grown in a year, which is actually kind of crazy, right? Free cash flows growing that much is actually pretty solid. Now I have to look further into the statement of cash flows to see what actually happened here, because it seems like operational activities gave them an additional $4 billion in cash flows, roughly, almost $3.9 billion, which is actually pretty damn crazy, right? That's a lot of cash flow for a company to generate in 1 year, in addition to what they were already doing. If your top line grew by 8%, and then, they grew almost, how much here? 23, 34, almost 11 billion in revenues here, right? And then, oh, I just realized that's a really bad color. Let me write it here. 11 billion in revenues grew, right? Which represents about 8%. And then your cash flows grows about 5 billion, right? Sorry, not 5 billion. It's more like it was about 3 billion, I want to say, right? 4 billion. Let's just say 4 billion, right? Well, that's still about approximately 30%, okay? And that's a really good margin. So a 30% growth in cash flows on the bottom line compared to a 8% growth on the top line means that they're really, really controlling costs, okay? You got to look at it from that perspective, and I hope that kind of helps you out there. Okay, cool. Now, there are also rumors about Walmart kind of releasing a model that is going to kind of compete with Amazon. Now, we all know that Amazon is Walmart's biggest threat, okay? And the thing is that Walmart has done a really good job with moving things online, okay? So what you really want to watch out for here is any news of Walmart releasing a kind of a membership based strategy like Prime, where they deliver things to your home, and they have the capability to do that. Remember that Walmart's logistical operational logistics is in a hub and spoke model, where they have crazy distribution centers, something that Amazon has been spending years to do at negative cash flow. Okay, and now they're in a pivotal moment when they can electrify the entire business and convert that online. So this would be a very advantageous move for Walmart, and they're a direct competitor of Amazon. Okay, so that's one thing that you have to also keep in mind. Low cost products that are sold to the masses. That's what they're doing. Okay, if you look at Amazon, they have a similar model, very low margins. Okay, high volume, right? Okay, that's honestly the most key things that I got from the 10Q here. There's really no point to go through all of these things because the financial metrics are all nicely kind of put together by Morningstar here. So it makes more sense for me to go through this over here. Okay, so let me just go through this real quick with the fundamental analysis of this business. Now we have revenues growing at about a 2.5 to 3% growth rate per year. This is 3 years annualized, and I'm going to show you. I actually did my own model to show how much revenues have been growing for the past 10 years instead, because we're doing a 10-year DCF. Now, net income's about 3%, which is decent for a company of their size, which has a very, very mature line of business. Operating income being negative is fine because of how much of cost they have to generate that revenue, okay? And then they still manage to return equity to shareholders at about 22%. The industry average for this sector is about 16%. So Walmart is doing a pretty phenomenal job. Return on assets, which is how much it returns on every single asset that it owns, is about 6%, which is also decent. And ROIC, for every dollar that they invest into a project, they generate about 11%, which is decent, okay? Now, looking over at the financial health over here, we have debt to equity ratios at 1.1, which suggests that the company is not very debt laden. They are at a pretty decent level of debt here, which means equity is not over leveraged. Okay, when we talk about debt over equity, we're talking about all the debt that the people have over the value of stockholders' equity. Okay, value of stockholders equity. And so what you typically want to see here is a value of 1 that shows you that for every level of debt that they have an equal value of equity. Okay, this value of 1 usually shows a stable debt to equity level. Interest coverage is for any how many times it can cover any dollar that it borrows. So for every $1 that Walmart can cover that Walmart borrows, it can cover it 9 times. Okay. Which is very decent. Okay, now here's where many analysts and many people would have a problem with this business, and they would say, oh my god, look at this, right? Well, look at the current ratio, okay, and the quick ratio. Okay, well, the current ratio is simply going to be the current assets over current liability, and the quick ratio is more of the current assets minus inventory over the liabilities. Okay, so assets over liabilities, and then the quick ratio is going to be, we call this the asset test. This is going to be your assets minus your inventory over your liabilities. Now, what does Walmart have a lot of? Inventory. Okay, now another thing is that Walmart also has a huge amount of liability. Now, Walmart is one out of 2 companies that I know that has a natural low current ratio and quick ratio, and it's okay that this is so. Okay, now the reason being is because Walmart has a business model where they can lever their business and negotiate terms with their suppliers. Okay, you have to understand this. When somebody wants to put an item on Walmart shelves, they give it to Walmart on consignment. Okay, and this person gives those items to Walmart on account, which means to say accounts payable is high. Okay, so it's not Walmart doesn't buy it on cash majority of the time. What happens is they give it to them to sell, and then realize the profits, and then kick back the profits to them, while drawing down on accounts payable. Okay, so it's kind of like everything's bought on credit. Now, when that happens, what that does is it pushes liabilities up big time. Okay, and since your assets stay almost the same, you can imagine what happens to the current ratio. If your denominator goes up while your assets still the same, then your current ratio goes down. Okay, so and this is more amplified with the quick ratio. Why? Because there is a inventory component in here that makes this number even larger. Okay, so what happens is liabilities, when it goes up, it makes this Q ratio even further lower. Okay, so this is the reason why a high liability for Walmart and Amazon's the other business that does this. Okay, this is why it's not a problem. If you realize, and you've been tuning into before live streams prior to this, you realize that I always mentioned that current ratio and quick ratio should always be about 1. That means you have sufficient assets over liability. But with the exception of Walmart and Amazon, because of their business model. Okay, so these are things that you should keep track of and you should know. So with all things being said here, Walmart is a formidable company. It has a wide economic moat, and I think that it will do well in the next year. And I think being in this space is a good spot for this company in the short run. Okay. Now let's look at the intrinsic valuation of this company that I came up with today. This is finbox.io. You can go and have a look at it. Obviously, if you go pull up your own 10-year Gordon growth exit multiple, it's going to show you a different value. I've tweaked my inputs here to reflect more of the sentiment that I think is reflective of Walmart's future. Now, we saw the first thing we're looking at here is revenue and EBITDA, which I'm forecasting to grow at about 3% every single year. I'm going to keep it 3% every single year. I know it's a little bit of an assumption here, but I think a 3% growth rate for a mature company like Walmart is about right. Now look at, I actually pulled up the revenue history for Walmart for the past 10 years, and this is the percent change that we saw from each year to year. Now averaging out in about 10 years, simple Excel math here, you can see that the growth rate is about 2.55%. Now you can see that some years see a very high growth rate and then some see negative growth rates, and then the average is about 2.55. So taking at 3% this year, knowing that Walmart would benefit from this coronavirus structure of business is a decent assumption. Okay. Now with CapEx over here, we have a 5-year average of 2.1%, but remember what we've been seeing on the 10Q. This is where everything comes together. What I showed you earlier with CapEx and how management was expecting to lower CapEx. If they've been spending 2.1% every single year and the CapEx has suddenly decreased, I took 1.5% for the next 2 years and then about 2% for the following year. So taking into account that coronavirus goes on for at least the next 2 years, CapEx would be lower in these 2 years than it would be as Walmart continues to build its cash position. Okay, working capital here should have no change. The last 4 quarters saw about 3.3% in net working capital, which is the business that the amount of cash flow that it uses to run its business, and then depreciation and amortization at 2.1% average. That reflects pretty straightforward across the board. And the tax rate of 26%, alternating between 24 and 30% an average over there. And then the discount rate at about 7.5 and 8% over here. This is the weighted average cost of capital. Now, we can increase this, but to be honest, if we increase it too much, it might not be fair for Walmart because they already do have squash margins, and I've already reduced the revenue forecast to reflect the discount rate. Okay, so over here I'm going to leave it as 8, 7.5, and 7, and where I've made an adjustment is in the terminal value, where we see the perpetuity growth rate, which is the risk-free rate plus the 10-year, the risk-free rate plus the GDP of the U.S. economy. This is coming to about $164 in fair value for Walmart. That represents about a 25% upside. So we're looking at a profit target of about $160. Now, it doesn't necessarily mean that Walmart has to go there right away. What it means is that eventually, at some point, between this year and next year, the target for Walmart will be up here. Okay, and so we have a significant amount of room to grow, and obviously we're not going to go like that, right? We're definitely going to have, one of these, and then this, 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 and this, and then eventually get up there. Okay. Company is a mammoth. It is great. I think that it's a substantial business to own at this point. I like the business, and I think that management is doing a good job. So with all those said, that's your fundamental analysis for Walmart. I hope you enjoyed it. I have 8 minutes here, so I'm going to try and use it to the best that I can. Welcome into the stream. If you're here for the first time, make sure you click like and subscribe. Come on, we need 4 more likes to get to 100. 4 more likes to get to 90. In fact, if we can get to 100, that would be nice. So quick question here from all of you guys, for all of you guys that are in the stream right now, has all the stuff that I've been going through been helping you out here? Because I would really appreciate some feedback here. Okay, I am going to leave the tickers alone, and I'm going to try to answer the questions that are not tickers and a priority here. Okay, Why are we so green, Byron? That is a combination of bullish exuberance due to stimulus news, and also the idea that we may see further developments within the market. Now remember that the economy is not the stock market, so we're pricing in things that are 6 to 8 months from now. Okay, is gold still good? Absolutely not. I don't recommend it. Look at how if you see something like this, would you buy into it? That's the question, right? This is the question. Would you really want to buy into something that's that high? It's up to you. Personally, I'm happy with where I'm at. I'm not going to buy more gold. Okay, let's see here. What else do we have here? Okay, we hedge. Okay, great. I went through the hedges already. Boeing is most definitely a move to make. Absolutely. I already told you what I'm in, so feel free if you want to go grab the same stuff. That's up to you. What target do I have for SPY? I never have a target for SPY. It's pointless to have a target for SPY. Nvidia calls. I don't know. You tell me. Okay, welcome into the stream, Raphael. Nice to have you here, man. Let's see. I attended the webinar yesterday. Great stuff. Thank you for that, Jake. I appreciate you saying that. That's something that I really take pride in right now. I think that this webinar that I'm running is going to really bring a lot of value to you guys. All right, great. Let's see here. Okay, thanks. This just in Walmart plans to create drive-in theaters. Whew, that would be interesting. Okay, yes, extremely helpful. Yes, it makes sense. Get that cough under control. Bruh, it's not a cough, man. It's just a throat clear, it's one of those like can you call out the Boeing calls I'm in? Okay, well, right now I am in a couple of Boeing calls, not just one. I have let's see, 11, 20, 210 calls. Okay, I have June 2021. I have 300 calls for those. I have what else? Yeah, these two, and one more, 190 calls for 1120. These are the calls that I have for Boeing. Of course, this is not financial advice. This is just what I'm in. I like to play battered down stocks like this, especially when they're sold off. That's the best time to get them. You buy them for far out. You have time value working for you. And what I will eventually do when I do get the opportunity to is I'm going to sell some puts against these calls and collect some premium so I can lower the cost basis of these calls. Okay. And what I'm going to, the next chance that I get a wave down, that's exactly what I'm going to do. Okay. If Boeing does come down further, so how I'm going to hedge these positions is not to buy a put on Boeing. What I'll do eventually is I'll sell puts when Boeing comes down and reaches somewhere where the support is. Okay. And then I'll turn some of these into spreads basically. So I have time value. Okay. Delta Airlines is going to continue. What's your take profit for Walmart? I don't have a take profit, but I just gave you the intrinsic value, so it's about 165. Take profit for Walmart. You can't really tell what the take profit is. It's about to break up to all-time high, Dean. So you got to kind of assess that for your own style there. What makes earnings such a gamble? It's always a 50-50 flip. There are too many things to consider when you're playing earnings. EPS and your revenues can be beat, and then the CEO comes on the phone call that he does, and then he says something out of pocket, and there you go, you're done. Okay, cool. I am really sorry, guys, that I didn't get to any tickers today. I did say this was going to be a jam-packed schedule stream. Come into the webinar tomorrow and, bring your tickers along with you. And I'll try to fit some time in the webinar tomorrow to answer some of your ticker questions. Okay. Sorry that I couldn't get to it today, but I will definitely make time for it next time. It's just that I think that giving you the content that I was supposed to give you today is much more valuable than spending time on the tickers. So if you enjoyed the stream today, please leave a like. if you can, that would really make my day. And you know, it would recommend this video to other people. So I appreciate you very much. Till next time, which is tomorrow, I hope to see you guys on the stream. We'll be having a webinar, and I will be teaching you how to chart. Okay, we're gonna do a stream on technical analysis. So if you want to have a technical analysis kind of a lesson, come through tomorrow, same time, same place. Yi Shun Jian, it's gonna be the same here, right? The same link. Not the same link, but it's going to be on the channel. So to subscribe to the channel so that you can see the link at 8:30, it'll be on my channel. Okay. So come through tomorrow, attend the webinar. It's going to be a great webinar tomorrow. I have, you know, it's going to be an off the cuff lesson, but I promise that I'll bring some value for you guys. Okay. Well, you guys have a great day. I hope you guys have a happy trading session, and I will see you tomorrow. Have a good one, guys. Peace.